Okay, good afternoon. How's everyone doing? You well? You happy? You smiling? Welcome to Get Property Wise with Leroy. And we've got a very special guest here today, ladies and gentlemen. She's looking beautiful in her bright colors. The ooba expert and regional sales manager for ooba, guys. So welcome, Natasha.
Hi, everyone. Thanks for having me, Leroy.
Thank you for joining us again. We appreciate you taking our time. We know you guys are very busy now. I know there's a lot of bond applications coming through at the moment.
Absolutely, yes. We're keeping out of trouble by keeping ourselves busy.
Okay, awesome. So I think, Natasha, let me just set up my phone here, just so we can see the comments. As I said, we're on this new platform, StreamYard, and yeah, man, we're working it out. Okay, there we go. Okay, awesome. I can see us. Okay, so how's things been? How's the holidays? When did you get back to work?
Yeah, so I actually, it was an interesting December. I worked through the December time, and I actually took leave after when everyone else was back at work. I think it was a late start for a lot of us because of the public schools obviously planning to go back much later this year. And so we took an extended leave, and I got back to the office yesterday.
Okay, nice, man. So we got you just back fresh. Okay, we got Richard. Richard is on. Just see, so Richard has to put on his mic.
Can you hear me?
Hi, Richard.
We can hear you. Can't see you.
You're live on Facebook. We just can't see you.
Okay, this is interesting. Can you? Yeah, let me get it right.
Okay, just put on your video. Put the comments on the side. Okay, so we got a few people that logged on. So welcome, ladies and gentlemen, guys. We're excited. We've got Richard. Let me just add. We've got Richard and Natasha from ooba on here today, and what we're going to be discussing is what's happening in the South African property market. We've had COVID-19. I think it's a year now since COVID-19. It's been about a year. We've had lockdowns. I think we're in our third lockdown, plus minus. I don't know what level we're on now, but it's been a tricky year, eh? It's been a tricky year. So guys, we've got them on here to just give us some insights on what's happening in the property market, what's happening with bond approvals. Are people getting bonds? Are they not getting bonds? What are they getting 100%? What's the loan to value? So we're excited to have them here. Welcome, Natasha. Welcome, Richard. Can you guys hear me?
I can hear you, Leroy.
Richard, can you hear me? I think Richard went quiet there, but that's fine. He'll jump back in. So guys, let's see we have online here. So if you have any questions for Natasha, if you have any questions for Richard, please feel free. When we get to the end of the get to the end of the broadcast, then we'll answer all your questions. Stevens, how are you? Debbie? Okay, we got a couple of people on there. Okay, awesome, guys. So welcome. Happy New Year. Are you in the office, Richard? Are you at home?
Yes, we're all working from home. Yeah, numbers are quite high here.
Okay. Yeah, where are you logging in from?
From London.
From London.
Yes.
Oh, okay, nice, man. How's London? Oh, but London is on a full lockdown, eh?
Yes, we've been in full lockdown since before Christmas. So one of the first times I've not been back to South Africa during December or been with the family.
Okay, shame, man. Yeah, do you guys know when you're
getting it's so unpredictable at the moment. You were here in early Feb, but now we had Boris speaking last night, and now he's speaking again sometime this week. So we'll find out. And there's new quarantine rules coming in. A lot of people stuck in South Africa that should be here.
Yeah, tricky. Yeah. So I was until the 15th, so we'll see what happens. But I think, guys, let's get into it. So Maybe let's start with you, Natasha. How do you feel about what's happening with 2021? What are your predictions? Hey?
Yeah, so I just wanted to open my drawer and get that crystal ball out, give it a dust off.
Please do.
I think we're encouraged. We're encouraged that the way the market recovered positively, obviously, towards the end of last year. The house prices remain resilient, and there was almost an unexpected year-on-year growth of 3.8%, kind of across all the price bands. So we're hoping that's going to continue. The mitigating factors, things like semigration, people realizing that they can live by the sea and still work, that's a real thing. So a lot of people are taking advantage of that. A lot of people are deciding to kind of upgrade the size of their properties to enable them to have a home office. COVID has brought about a lot of changes in behavior and people investing in property accordingly. So we're seeing, interestingly enough, that the freehold market is performing better than the sectional title market, which is a spin on what's been happening historically. And, interest rates remain flat. I'm not going to take ownership of this particular forecast, but people are saying perhaps another 50 bips before the end of the year, going down. So we think in the short to medium term, interest rates are going to play ball. They can't stay this low forever, obviously, but it remains an attractive environment for first-time buyers, particularly.
Okay, no, that's good. So you're saying it's a good. Now tell me, is this first-time buyers that are buying the freeholds, or people selling their houses and moving to bigger places with offices?
So we're finding a lot of people, obviously, are downscaling. So a lot of sellers, whether it's due to kind of financial stress or just stages of life, are downscaling. Where a lot of young families might take the opportunity to get a larger space, to have that extra bedroom available for an office space. First-time buyer activity is really probably going to be concentrated on the affordable market, so 500K and below. The majority of the activity is there. So we spoke about the 3.8% year on year. It's kind of balanced around the affordable market, having increased year on year by 7.9%. And then obviously on the other side, the luxury market, 3.9 and above, having dropped 7.2%. And the other price bands kind of making up the difference.
Okay, that's interesting. So I just see we've got JC and Day Nike on here. Is that from your side?
Hi there, guys. No, it's from Keller Williams' side.
So I think people that have received the link is really to more so to watch than actually join the conversation. So we're loving that you're here, but we don't necessarily need you on the call. Leroy?
Yes. Yeah.
I think everyone received the link. I forwarded the link to watchers.
Okay, you know what happens when you send the link, then they jump on
we love that. Everyone wants to be on.
That's good. That's good. The more the merrier. Let me put them on. Because the link gets you onto the broadcast and you can watch it on the social media platforms. But that's fine, guys. Welcome, JC. Welcome, Dave. Right? You guys might.
Thank you. Thank you.
And so, JC, you from Keller Williams.
Yes, that's correct. From Keller Williams Explore. Our ooba ladies shared the link to us.
Okay, that's good. That's good. Tell us, how's the sales going at Keller Williams?
It's actually, I must say, it's actually very good. It's the interest, especially we specialize, or me and my brother, we specialize in farms and small holdings, and is actually buying small holdings and farms is magnificent now.
Sure. That's
interesting, JC, because we are seeing more of a movement to the underlying areas where people have realized on the back of COVID they don't have to be in the CBD or close to their places of work. And there is more bang for your buck and there is more space in the outlying areas. So it's certainly a trend that we've picked up.
Now tell me something. I don't know who's going to take this, but for provinces, which provinces? Is this in all the provinces, or is it just in the 3 big ones, KZN, Gauteng, Cape Town, or where are most people buying?
I mean, I think it's linked to activity in the major CBDs. So the major metropoles where there's a lot of industry and obviously a lot of corporate head offices, where people are inclined to historically live close to where they work. You know, that's no longer a requirement, you know, kind of after COVID and the reset of how we work and how we operate. People are taking the opportunity to live where they'd like to and work remotely.
Okay, wow, that's exciting. And tell me, residential and commercial, because JC's talked about small holding now and farms, and that I didn't even think of that. That wasn't going to be a question of mine, because I thought that would probably be very quiet right now, farms and small holdings. But that's surprisingly. And the commercial side of it, because what I see there's a lot of alerts coming through for offices being sold on these platforms, eh? So on
I think there might be scope for commercial spaces to be repurposed, you know, into resi, given the way again that people have changed the way they're working. I know a couple of businesses and partners we work with are downscaling office space. A lot of corporations are doing away with it altogether. You know, a lot of the multinationals that have head offices here have completely done away with those office spaces. So, I mean, I think that's probably going to be something we'll see going forward, depending on zoning, you know, all the factors that would be involved in doing it that way. But again, you know, being in the CBD, is that going to be as attractive as it once was? Even from a residential perspective.
Yeah. So you have to either convert them to residential or maybe smaller office space. So yeah, it's tricky, I think, on that side, hey. And tell me, I don't know, Richard, with the bonds, maybe guys from you guys, what are they getting? Are people getting 100% bonds? I heard something that you guys are actually giving more than 100% to some. The banks are giving to finance the legal costs.
So we don't work with bonds. We work with the foreign exchange part. So often you will get clients that are looking to bring funds into South Africa when purchasing properties or paying off bonds.
Yeah.
So we'll facilitate that transfer. Whereas majority of people would do the transfer through their banks, which is quite costly. We come in now where we can do it at a fraction of the cost. So at the end of the day, the client is saving, we are getting business, and so are you.
Okay. So what Richard joined us from SGM FX in London, in the city of London. They are our Forex partner. So any non-res clients or people that are bringing funds from bringing into and outside South Africa, what SGM FX does is obviously manage the process and make sure all the boxes are ticked in terms of exchange control, in terms of compliance. And then I think helping real estate and helping clients, buyers and sellers retain control of that transaction. You know, a lot of times a cash transaction in its totality, or even a percentage deposit on a home loan, if it's coming from offshore, you know, a lot of times we pay more than we have to, number one, or we don't get favorable interest rates necessarily, and we lose control of the transaction because we aren't dealing with experts who know exactly how to deal with the compliance.
Okay, wow. And at the same time, we can also give advice as to where you can get the most out of your transfer. So if you're looking to settle when you purchase a property, maybe 8 months down the line, we could look at maybe hedging your rate at the moment when it's favorable, where you can get the most out of it. So to take delivery at a later date, rather than risking it going down.
Okay, so Richard, let me just to get understand, is this buying property in the UK, or is it when you're buying it this side?
So with Uber, we assume most of your clients are purchasing properties in South Africa. So in that instance, we'd be doing people bringing funds into South Africa, but we do transfer funds all around the world.
Okay. Maybe
so
when we
do a lot of South Africans taking funds out as well. So I mean, a lot of them moving to Canada now, where it used to be Australia, the big thing. But if you're a non-resident, it's quite easy to take your funds out of South Africa, and we can definitely facilitate that transfer. If you're a resident, you need to get Reserve Bank approval, which it gets a bit more complicated and depends on which bank you're with, but we can also facilitate that.
Okay. Tommy, you said something interesting, Richard. You said more people are moving to Canada. Are you guys finding there's a lot of people immigrating now?
Yes.
During this time, especially with the lockdowns and the travel bans, even during this time, there's still a lot.
Yes. So always with South Africa, there's always political uncertainty. And I know, depending on whoever's speaking at the time, you always find out, oh, that's it, I'm leaving. But I know, a lot of the time I see it's happening a lot more now. I think people are just fed up with certain cases at the moment. But also it doesn't help with the whole COVID scenario.
Okay. And you say they were moving to Australia, New Zealand, maybe the UK, but you're seeing that Canada's
Yes. Yes, that's what I've noticed so far.
Okay, no, thanks. That's good information. Maybe when we get to the end, you can share your information with the listeners, and then if they want to get hold of you. Well. And Natasha, from your side, are they getting 100% bonds? As we said, what's happening? Is it 90%? What are the banks?
There whisperings, on the back of COVID that the bank's lending appetite and risk appetite has decreased, and that they're taking a more conservative view on lending. So I kind of had two meetings today. So I started my day just getting back into finger on the pulse of what's happening in the market. The first meeting was a bank meeting, and they confirmed that in fact, their strategy going forward remains market share growth. So certainly that's not a reflection of a reduced lending appetite, which is good to know. So certain industries, certain sectors, obviously that aren't operating fully, hospitality and the like, are going to flag as a high risk kind of client. But other than that, the bank's lending appetite remains strong. 100% bonds, absolutely. If the risk makes sense, if the risk analysis makes sense, if affordability is there, if credit worthiness is there. We are finding a slight reduction in our conversion ratio, but that's more linked to the quality of the client. Now, when I say the quality of the client, we need to remember that in order to have our best chance of approval, we've got to have done our homework up front. So if we had access to that buyer before the offer to purchase was accepted by the seller, we could probably prepare them and increase the conversion ratio of all our applications. So, just a reminder to get in touch with us before we put in an offer to purchase. It might just be a couple of things we have to educate the clients about to make them purchase ready. And that's always going to improve exponentially, your chances of approval. And a property transaction has got so many parties: seller, buyer, attorney, real estate agent. I think before we embark on that legally binding document, just a reminder that offer to purchase, that deed of sale, is a legally binding document. Take out a day or two, engage with your originator, and do the homework to be better prepared for an approval, for a successful outcome for all parties. And in a time where we're questioning the bank's appetite, for lending 100% bonds, even bond plus costs for first-time home buyers, we need to be cognizant of the fact that a multi-bank submission is going to increase our chances of approval. I always mention, the stat, the 42% of bonds that are declined by one lender are approved by another.
That's 40%.
So by using a home loan comparison service, you're effectively doubling your chances of approval.
Because that's what so what you're saying, Natasha, is because most people will say, listen, I bank with whoever you bank with, Capitec, Absa, Nedbank, and they go directly to their bank, and their bank says, listen, no, or gives them not the best rates. And they just take it because a lot of people think that because they've been banking with whichever bank for 10, 15, 20, 30 years, that they'll necessarily get the best rates for them. And you're saying that's not necessarily the case.
So absolutely. So, competition drives the best deal, I think, in many aspects, of business. But when it comes to a home loan, Yes, the bank is not going to encourage you to shop around, because then he has to compete with other lenders. If you go into a bank direct, there's the offer, sign here, thanks for coming. The only way you're going to know if you've received the best deal is by getting competing quotations. So we're not here, we don't have an agenda to take you away from your bank. Our banking partners are the lifeblood of our business. But certainly, we can encourage them to come back with the best possible offer, with a bit of competition and with competing deals.
Mm-hmm. Okay, that's
so it's a win-win.
It's a win-win. So guys, if you are a first-time buyer, or you are looking to downscale or upscale, depending on what it is, guys, you can go to the Property Pig website. We've got an ooba link there where you can get a pre-qualification course. Natasha says that it's better before you sign the OTP, rather engage with the bond originator, see what you qualify for, see what your credit, what you can get before going on. And that will determine, obviously, what type of property you're going to buy, instead of wasting your time.
For sure, Leroy, especially for investors, if we can calculate the client's total affordability, we can speak to their investment strategy and say, right, can we buy 2 properties for 600K, or do we want to buy a freehold for 1.2 million? What is our strategy? What is our business plan? And when we've got a blanket number, we can allocate that exposure so that it works for your strategy as an investor.
Yeah, no, true, guys. So go to the Property Pig website, click on the ooba link, engage with Natasha and the team, and they'll be able to assist you on that side. So let me see, what did we cover? Almost everything here. And I think
sorry, Leroy, while you're looking, I obviously had that bank meeting, which was encouraging, and I saw one of our officers just to social distancingly drop off some marketing goodies, and they said that actually had their best January, which echoes what JC was saying from KW, their best January in 5 years, and starting off late, as we discussed early in the call. That's very encouraging. It was a very encouraging start to 2021. That January, which is traditionally quite a quiet month, we're seeing activity.
So that's very encouraging. I'm actually feeling encouraged by this. And Natasha, tell me, which banks do you guys work with? So how many banks? If I come to ooba, I'm an investor. I'm getting a property, multi-let or buy-to-let, whatever it is, and I'm saying, okay, how many banks are you guys going to go to?
So we deal with up to 9 banks, depending on the deal structure. We've got the big 4. The big 4, as we all know, is Standard Bank, ABSA, First National, and Nedbank. And then we've also got Investec, Rand Merchant Bank, which is obviously the private wealth arm of the FNB group. And we've got an alternative lending solution. They are known as Sentinel. We've got the affordable housing space. We've got HIP. We've got Atala, depending on geographically where that property is. So we've really covered the bases in terms of alternative lenders, private banked, high net worth clients, and first time buyers. Every bank is going to have a different policy, a slightly different policy that might speak to your deal structure better, than another bank, which potentially could be your own bank. So again, don't limit your options when your deal structure might actually appeal to a lender that isn't your primary bank. Knowing that market share appetites change within the banks at various times for various reasons.
Okay, and that's interesting. I think you mentioned 1 or 2 that most people don't know about. I think HIP is affordable, hey, if I'm correct.
That's correct.
If your income is less than 15,000 plus minus, eh?
That's correct. Yes, I think the number is 80.
And then Sentinel, I think, is also for if it's foreign. If you're a foreigner, they'll look to find.
Sentinel bridging the gap between kind of a deal that makes business sense, but doesn't necessarily tick the commercial bank's boxes. So they could, because it's not a mortgage loan, they structure the finance in terms of the same way that we do vehicle finance. So because of the way they structure it, they're exempt from certain NCA requirements, which means they can they can require slightly less deposit for a foreign national, a slightly less high deposit for a self-employed applicant, if the deal makes sense. So it's an installment sale.
Yeah.
Over a mortgage. So it's a slightly different structure, but they certainly are bridging the gap when it comes to certain profiles of clients.
So Natasha, if I'm getting, there's basically no reason why your deal should not be fine. If you're credit worthy, then ooba will find a way to finance, whether you're an investor, whether you're a first-time buyer, as JC said.
It's always so interesting, Leroy, because property generally, even for investors to some extent, is a highly emotional transaction generally, because we're speaking about a home first and foremost. The juxtaposition of that is that finance is actually extremely black and white, and it's numbers driven. So to strike the balance, we approach each property transaction to support you and to be excited and to partner with you. But also we need to make sure that those numbers make sense. And because we've got our hands on I don't know what the bank scorecards are, but certainly the major points that the banks are looking for. We can guide you in terms of what we need to have in order to make that deal successful. So that's where I think we add value in terms of partnering with you, but also in terms of being quite upfront and quite transparent about what is required.
No, that's good, guys.
Nothing worse than falling in love with a property and having your heart broken. Let's do the work upfront.
Yeah, let's do the work upfront. Get the numbers, get your figures right. Do not buy with your heart, buy with your calculator. And I think that's what ooba gives you as a value add there. So guys, thank you, man. I think we've come to the end. Thank you. That was great information. Let me see if we've got some questions. I see we've got one or two questions. Stevens is asking, are banks giving 100% loan to value when you buy in a company?
So the general rule of thumb is as soon as it's a legal entity, you generally are subject to at least a 10% deposit. But that does change depending on the deal structure. So once again, you want to engage with someone upfront, have us understand your deal structure. Is it just a property owning entity or is it a trading entity? Are you self-employed or are the members salaried? It varies. It's possible. Yes.
I think from Stephen's side, I think he's getting a salary. So I think he's asking from getting a salary, maybe standing surety for the company.
So yes, once again, it is possible. If it had to be in his personal name, the chances would be better of 100% bond.
Okay.
All right, if that helps.
Yeah,
Stephen,
does that answer your question? Guys, if you have any more questions, we don't get Natasha and Richard on very often, so take this opportunity, ask the questions. Right? Anything you're not sure about? Okay, but it seems like it's good from that side. So I think Natasha, Richard, guys, thank you for taking out your time today.
Thank you.
We appreciate it. Richard, if you can just quickly tell them how we get a hold of you. Someone wants to.
So it's through Uber. Uber will give our details out.
We'll do, thanks, Rich. What I'll do is send the SGMFX details, Richard's details, and you guys can post it on the property pick or send the link on the comments.
Yeah, that'll do. Thanks, Richard. Appreciate that.
Sure.
Thank you. Guys, any last words of advice for investors 2021? Things they need to look for, things they need to look out for, maybe be careful of, or opportunities that are out there right now?
I mean, distressed sales remain. I think, on the back of payment holidays, people that are coming out of payment holidays and realizing that they might still be distressed. From an investor perspective, there certainly are opportunities there to capitalize on. Keep an eye out for those, and certainly given the interest rates and the fact that we're hoping that they're going to remain stable at these unprecedented levels in the short term, take advantage of that, and as always, shop around, make sure you get the best deal. And guys, don't sign an OTP before you've been pre-qualified.
Don't sign an OTP before you've been pre-qualified. And once again, go to the Property Pick website. The Uber link is there. Click on the pre-qualify button. It'll take you directly to Uber, and they'll be able to assist you, give you a pre-qualification, and help you and see how much you'll qualify for and what you're looking at. Okay, so that's good, guys. So thank you, Richard. Thank you, Natasha.
Thank you.
Last one from my side is that last week we loaded about 54 deals onto the platform. This week we've got about, tomorrow I've got about between, they came through, many emails came through, so I need to check. It looks like it's about 15 odd deals. Some of them are inner city flats, some of them are multi-let. So go to the platform, subscribe, look at the properties. When you see the property, go to Uber, pre-qualify, and then put in the offer for the property. Okay? So, and if you have any questions, we'll put our contact details in the comment section. You can also email us at info@propertypick.co.za. So if there's not any more questions, Natasha, thank you so much. We appreciate it. There's a lot of value, a lot of good information that you gave us there.
Thanks, Leroy. I think we should go into 2021 positive. Anyone in the property industry hoping that we retain this momentum and people are taking advantage of the favorable conditions out there.
Yeah, no, most definitely, most definitely. Okay, thank you so
Thanks
much.
for having me. Cheers.
Cheers, guys. Cheers, JC.
Cheers, thanks.
Cheers, guys. All the best. Bye-bye. Okay, ladies and gentlemen, so if you do have any questions, further questions, put in the comment section. We'll answer it later. Auntie D, Lionel, Cesare. Thanks, guys, for logging in. Remember, every Wednesday, 1 p.m. Okay, this week we had a lot of people on here. Yeah, we had Richard from the UK and JC and Natasha from Uber. So as I said, go to the website, the Uber link, click on it, get your pre-qualification. Interest rates are low, guys. So if you want to buy a property, now's your time. Okay? If you want to invest, now's your time, right? There's never a better time than now. Okay? Some of you have been putting it off so long, right? So now 2021, this is our year. Okay, all the best, guys. See you next week, same time, 1 p.m. What we are looking to get on the next couple of weeks is we're looking to get a representative from TUF on. Now, TUF finances inner city buildings, and they also finance township properties with Umastandi. So we've spoken to them. We're going to get a TUF representative on in the next 2 to 3 weeks. We're also going to get a GPF, Gauteng Partnership Fund, or the Gauteng Property Fund. We're also going to get a representative from them on to tell us what their criteria is, what they're looking for, and how we can get involved and get finance for them. Good stuff. So all the best, guys. Have a good day. God bless.